Today we will be showcasing and backtesting this simple EMA scalping strategy that has a high win rate. The strategy works and was backtested on the 1-minute time frame. Now that we have gotten that out of the way, let's start. The first indicator that we will add to the chart is the exponential moving average. Head over to the Indicator Search tab and search for the EMA indicator. Select the indicator made by TradingView and add it to the chart. Make sure to double-click on the indicator because we will be needing to. Now let's head over to the indicator settings. Click on the first EMA settings and navigate to the Inputs tab. We will be changing the length to 200, after that navigate to the Style tab. We will change the color and thickness of the indicator to make it more visible. Now let's change the other EMA settings. Head over to the Inputs tab and change the length to 50, after that we will also change the color and thickness of the line to make it more visible. That was all that we needed to do. Now let's add the last indicator to the chart. Head over to the Indicator Search tab and search for the ATR indicator. Select the indicator made by TradingView and add it to the chart. After that, navigate to the indicator settings and click on the Style tab. We will be changing the color to make the indicator easier to see. We won't be changing the input settings, so let's now take a look at how we will be using the indicators. The EMAs will be used as a basic trend direction indicator. We will also be using the indicator to identify pullbacks and profit from reversals from these pullbacks. As you can see, we also added the ATR indicator. This indicator will be used to set correct stop-loss values and take profit targets. Now that you know exactly how we will be using the indicators, let's take a look at when we will enter into a buy position. Firstly, there will need to be a bullish EMA cross. This means that the 50-period EMA has crossed above the 200-period EMA. This is also known as a golden crossover, indicating that the current trend of the market has switched to a bullish trend. We will also need to make sure that the price is trading above the 50-period EMA. This indicates that the price is pursuing the bullish trend. This also can prevent taking trades in a ranging or sideways market. Once this has been confirmed, we will take a look at the price action. We will need for the price to make a pullback to the 50-period EMA. Once this happens, there will need to be a reversal showing that the price will continue in the uptrend. We will consider it a completed pullback if the next candle is going with the trend again. This way we can be sure that the market hasn't switched trends. Once this happens, we will enter into the position. To make sure that we use relevant stop-loss and take profit values, we'll take a look at the ATR indicator. This indicator shows us the average true range. This will allow us to choose a stop-loss that takes the current volatility of the market into consideration. This means that the stop-loss will be based on how much the market has previously moved. As you can see, the current value of the ATR is 33. This means that we will place the stop-loss at 66 since this is 2 times the ATR value. For the take profit, we will target a 1.5 times risk-to-reward ratio. Now let's see how the trade plays out. Here is a different entry example. Firstly, we can see here that the EMAs have made a bullish crossover, meaning that the 50-period EMA is above the 200-period EMA. We also see that the price is trading above the 50-period EMA, indicating that the uptrend will continue. This means that the second condition has also been met. Thirdly, we see here that the price has made a pullback to the 50-period EMA. Moreover, we also see that the price bounced of the EMA, indicating that the bullish trend will continue. Based on this, we will enter into the position. For the stop-loss, we will need to take a look at the ATR indicator. We see that the current ATR value is 31. This means that our stop-loss value will be 62. For the take profit, we will target a 1.5 times risk-to-reward ratio. Now let's see how the trade plays out. As you can see, the trade was very profitable. Now let's take a look at when to enter into a sell position. For a sell position, the following conditions will need to be met. Firstly, there will need to be a bearish crossover with the EMAs. This means that the 200-period EMA is trading above the 50-period EMA. As you can see, this occurred here, meaning that the first condition has been met. Secondly, the price will need to be trading below the 50-period EMA, showcasing that the bearish trend is strong and likely to continue. Once this condition has been met, we will take a look at the price action. We will need to see a pullback to the 50-period EMA followed by a bearish reversal, indicating that the downtrend is likely to continue. As you can see, this happens here, meaning that the third condition has been met. Because of this, we will enter into the sell position. For the stop loss and take profit values, we will take a look at the ATR indicator. As you can see, the value of the ATR is 22, so let's now adjust the stop loss. Since the value of the ATR was 22, we will be setting the stop loss at 44. For the take profit, we will target a 1.5 times risk to reward ratio. Now let's see how the trade plays out. Now that you know exactly when to enter into the position, let's take a look at the backtest. We will backtest the strategy on the Forex markets using Forex Tester 5, so let's quickly set up the chart. Forex Tester 5 is a backtesting and trading simulation software that allows you to see tick data over years of historical price action. This causes for you to be able to simulate trading and backtesting as close to trading in live markets as possible. On top of that, Forex Tester 5 has many tools, indicators and statistics that you can access and use to better and/or increase the win rates of your strategies. You can download Forex Tester 5 with the link in the description and get 10% off by using the code 10SWITCH. Now let's finish setting up the chart and take a look at the results. We backtested the strategy on GBP/USD, EUR/USD, and USD/JPY, taking around 33 trades on each pair, making for a total of 100 trades. The strategy ended up having an average win rate of 71% with a total of 71 wins and 29 losses. This means that the profit factor for the strategy was 3.67, making this a really good 1-minute strategy. However, please remember that past results don't mean future results, so I would recommend testing out the strategy yourself before using it in live markets. If you enjoyed the video, please leave a like and subscribe to the channel, and if you have any questions, feel free to leave a comment.